Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so we have some great data from Altos Research. As some of you know, that we have a much different opinion on the real estate market than the market crashers, who look at every piece of data with the market's going to crash. And so we're going to go over some of this because you're going to get a better perspective on this based on what you are getting from them, which is hyperbole. Okay. So we're going to start with the first one, and then we'll talk about each one. We have a bunch of slides, so you have to watch the whole video to get all the information.
So you call it hyperbole, I call it clickbait. But
Clickbait, right? We don't do clickbait here. We don't really care. We're going. All we do is showing the data and talking about it. Okay. So this first slide is the total homes for sale. This is the inventory. This is the entire U.S. This is the total inventory. Now, if you look at this, it goes back to 2015. If you notice. The very right part of this, where it says 418,000 homes, that's the total number of homes on the market. That change, where it's the low going up, is what everyone's freaking out about. Like 46% more houses are on the market. Everyone's like, it's like, oh my God, it's 46% more. The market's going to crash because it's being flooded with properties. Well, yeah, but it's 46. But look how low that is. Look how low that is. It's 46% more because it's from the lowest ever. Like this is the lowest percentage of ever homes on the market. So yes, if it changes at all, it's going to be a huge percentage rate. When you look at this historically, we're still less than last year. And when you go back to 2019, we're still less than half. So literally you would have to have 200% increase since April to have just where we were at 2019, which was a totally normal market.
Right.
Like it wasn't an inflationary or weird market. It was a totally normal market.
And we were still short houses at that point. So there's room in the market for a lot more homes, which is kind of the point of this chart. So just because there are 400,000 homes on the market for sale, even if there were 1 million homes on the market for sale, there's room for more than that because we still need more homes for people to move up to move down, whatever their situation is, and people who are renting who want to buy homes.
If you notice, this chart, it has the same pattern every year. We have fewer, all those low points are April, and all the high points are like October. Okay, and this happens every year. Homes come on the market more, they get bought quicker, so there's less on the market, and then they sit longer through October, so there appear to be more on the market, right? The only anomaly is 2020, the pandemic, and the reason why it started to go up and tanked is because in July it was like the biggest sale month of the last decade. Like more people bought homes in July of 2020, so that we chopped off all those that high October, and that's sort of what started this. That's you see it just tank from basically January of 2020 to July of last year, 2021.
So when he's talking about tanking, he's talking about the number of homes on the market because they were just all absorbed.
And that's what caused the price increases. Like literally this one slide shows why the prices were increasing. So when you see those numbers, look at this, think about this chart in your head and go, yeah, they have gone up 46. Like if you have one house on the market and the next day you have two, the market crashers would say, well, they're double the 200% increase in homes on the market now. It's going to cause a market crash because there's now two homes on the market. So just remember it comes from and as these numbers get bigger, those percentages change. They become smaller percentage changes. So that's why you got to be careful that's why they always talk in percentages, because it's great clickbait and it doesn't. But if you look at this, you would be like, wait, why is that a housing crash? Like, why would this, if that is a housing crash, why didn't the housing market crash every day from July of 2015 until July of 2020 when there were more homes on the market and less buyers?
Right.
Right?
All right.
Next slide. Okay. This is the list price of median homes. We have the same phenomenon. List prices get a little frothy in April, May, and then they fall back through the winter, and then they go up again.
So we want to define what a list price is.
Okay, let's define list price.
A list price is an invitation to make an offer. It has nothing to do with the value of the property because the list price might be high if they're fishing, or the list price might be low if they're trying to generate a lot of interest in the property, get multiple offers, and then maybe sell the property for a whole lot more than they would have had they priced the property right at market value. So a list price is an invitation to make an offer, has little to do with the value of the property.
So, okay, so here's the thing. The other clickbaity thing that you saw was they talked about the list price reductions have fallen 10%, or people have reduced their list price 37%. Well, that happens every year. People reduce the list price. You can see on this chart it happens every year. And yes, it's happening now because what people were doing was, if you were selling your house 3 or 4 months ago, you were expecting to sell it for $20,000 more than the last person. This is, I'm not kidding you. Friends of ours posted on Facebook that they sold their house in Nashville 3 years ago, and they got X, which is the price. They got a value for it. 3 years later, they found out the house just sold for $450,000 more than they paid. $450,000. So when home prices are going up that fast, you don't ever list it what the last guy sold at. You list a much higher price. And then if the market's not that hot, you have to reduce it. But that doesn't mean the market's falling. It just means people are reducing. So people see this list price reduction. It happens every year. And then all these videos come out about it. But I see them on Facebook all the time. And it was funny because one of them was like in a market like where it said it was 23% of the homes had list price reductions. And an agent in that market commented going, hey, we're still getting multiple offers. So relax. This is not like the thing, okay? Okay, this is the percent, this is the thing we just talked about. This is the percent of properties with recent price reductions. This follows the same trend. This is year over year. You can see that there are 7 different years that it monitors. We're in the 7th year. And yes, the number is increasing. And the reason it's increased, even though we're still below 4 of the highest years for total number, it's increasing more because it's still frothy, but people are increasing they're overshooting their initial price, and they're just coming back to a more realistic price. But this is not a price decline. This is not home price decline, because nationwide last month, what did home prices do for the first time ever?
They went up.
They went up to over 400,000.
Right.
They're over 400,000. First time ever last month. So home prices are still going up.
Right. So when he's talking about prices over 400,000, that's the median price across the country.
Yeah. So home price is still going up. So yes, it's like when you take the trajectory of home prices and you tilt it down, people say it's going down, but they're still going up. They're going up at a lower rate.
Right.
So if you went up at 15% last year and you went up at 4%, people say home prices are down 9% or 11% because they went from 15 to up 9. So they're down 11%, but they're not really down. That's a change in the up.
Right.
That's what you're saying. Whenever you see the video that says home prices are down,
they're not down.
They're not down. Okay. If they go down, we'll tell you. If in October we see nationally like they go under 400 or they go from 407 to 405, we'll tell you, hey, they went down.
Yep.
2% or whatever, $2,000. This is a very interesting one.
Okay.
Okay. This is the percentage of new listings that go immediately under contract.
So these are a couple different scenarios. Some are pocket listings, which means that the agents are not putting them in the MLS for the population at large to see these properties. They kind of work out a side deal, if you will, either with another agent or with a buyer already known to them, and they work out the deal. And then when they put the house in the MLS, and it's already under contract. It's not available for somebody else to purchase. The other possibility is that the house was never listed to begin with, but the agent has put the house in the MLS simply as a data point. And that happens as well. So there are a couple scenarios. And of course, last but not least, what happens is in markets where they allow the coming soon status, that's also a possibility where the house is in coming soon status, and that's when they get offers and they negotiate something. So then by the time the house goes in the MLS as actually available for sale, it already has an accepted offer because they got their offers while they were in coming soon status, and that's how that got to that point. This is a chart that just shows you these homes that basically hit the market, and when they hit the market, they've already got an accepted offer. So they were never really available for everybody at large to consider. So
I want you to look all the way at the left side of this chart. When you look over there where it's that sharp spike up and it's below 20, it's about 15%. Of course, that's 2021. If you go back historically, this is a less than 5% number. If you were to zoom out on this and go back to, the last decade, almost never does a house come on the market under contract. Because the way it normally works is a person hires an agent, they put the house on the market. even if they sell it in 2 days, it still is not a immediately under contract. It just has a low time on the market. Okay, the reason this is unheard of is because until this number goes back to 5%, this is still a smoking hot market. Now, how do these happen? Okay, one way they happen is a real estate agent will farm an area and say, hey, I'm looking to buy a house in your neighborhood because I've always wanted to live in your neighborhood. And then what happens is the person says, hey, we'll sell you the house. And they go over and meet them, and they look at the house, and they write up the contract, but then they're required to put it in the MLS. So what they do is they literally put it in the MLS, and the status they put it in the MLS as is under contract. So it goes in the MLS, but it immediately shows as a pending sale under contract. That's how that happens. Now, what we're also seeing is investors who are out there doing the same thing, and people who already have lined up I've already have the buyer, I've already talked to like 5 of my neighbors who want to buy the house, and I'm just going to sell it to this guy. I need someone to do the paperwork, and they do this. This is a huge thing that nobody talks about. And it doesn't matter what interest rates or whatever do, but when literally a fifth to a quarter of all the houses are immediately disappearing from the market, they're not actually coming on the market. It doesn't really matter what inventory level is. And inventory is historically low. And that's one of the reasons why this is happening.
So this is a huge concern because think about it. The general public never has an opportunity at these houses. So keep in mind, if the general public had an opportunity at these houses, would these houses sell for the same amount? Would they sell for more? I mean, normally we market houses for some time so that a broad number of buyers, potential buyers, has an opportunity to consider the house and then make an offer. But when these homes are being entered in the MLS already under contract with very limited exposure, that lets you know that it's still a really hot market. So these homes don't require broad exposure, the very limited exposure, and they're already sold.
Another indication is this next slide, the percent of active market relisted. Now, why this is important is because when interest rates go up, homes tend to become more unaffordable. So you may have gone under contract and then you lock your loan 2 weeks later, and all of a sudden you go, oh, interest rates went up 1%. Now I can't afford the house, and you fall out of contract. The house comes off the market, gets relisted, right? Historically, this happens at 1 to 2%. There's no backup offer. It comes off the market, and then it gets relisted as a new listing, okay, a total new listing. And you can see from this chart that it's literally the same. Like it's following the exact pattern it's followed for the last roughly 5 years. Like it's doing the exact same thing. So this hyperbole that some people are being fed and are putting out there on their YouTube channels, that the home's falling out of contract, it's not happening. Like the data is showing that it's not actually happening.
Right. I mean, look, homes fall out of contract all the time, either because people can't afford the interest rate or the home inspection was not to their satisfaction, whatever the reason is. Homes fall out of contract all the time. But these homes are rolling right back into contract again pretty easily. A lot of times there are backup offers. A lot of times there are multiple offers, and those buyers are still out there and willing to go into contract. Particularly since they didn't get it on the first go around, they're more than happy to get it on the second go around.
Even if this goes up to a couple percent, like 2 or 3%, it's still not unheard. It's not unreal. It's still not like a terrible thing.
Right.
This would have been interesting to look to see what this looked like in 2000, probably 6, 7, 8. Okay, this would have looked much different. Matter of fact, everything would have looked much different. The reason we wanted to show you this is because sometimes when you see the information about what's going on, you listen to a small, they take a little snapshot and they show it to you just right that make you think that, oh, if you look at it just from this angle, it looks like this bad thing is happening. But when you step back and look at the whole thing, you go, it's not. It's just like a normal, like this is I don't see the big deal, like what's happening. And then you have to ask yourself, like, why are prices still going up? Because prices went up to over 400,000 for the first time ever. And in the midst of the last 6 months, we've had interest rates go up.
Right.
And the conventional wisdom was, if interest rates go up, that's less affordability and it cuts out buyers. But here's the problem: is you have this many houses available and you have this many buyers. So we've lost a couple buyers. So now we have this many buyers and this many houses available. So home prices are going to probably keep going up. I mean, literally, we would have to chop off probably a good number of potential buyers.
Right.
And we probably have lost buyers just through like what you said. They've just said, forget it. I'll wait.
Right. So, and I don't blame them. I mean, a lot of people just got discouraged. They got tired of being beat out. And it's not necessarily an affordability issue with them. It's just been an emotional roller coaster, and they're just done with it. And they're going to sit this one out. And we understand that, and we don't blame you. Everybody makes their own choices for their own reasons, and that's totally fine. But what the market's showing us right now is inventory levels are low, prices are continuing to appreciate, and when you look at all this data, the market's not doing anything really hideous. It's just behaving the way it normally does.
The reason why we want to point all this out is because people are trying to make decisions, and we are not saying home prices will keep going up. We're not saying they won't go down. We're just saying that this idea that the market will crash and that you'll be able to buy a house for 20 or 30% less in a year is fake. And why is it good to know this information? Okay? If you sold your house last year and you've been renting for 15 months, you have probably lost $40,000 to $60,000 in equity on a median home. So if it's a more expensive home, you've lost more. If it's a less expensive home, it's gone. That equity is gone. And you've been paying rent the whole time, so you haven't been paying principal reduction payments. You've also lost out on the tax benefit of your mortgage. You've also lost out on the fact that all of that gain would be money in your pocket because you don't pay taxes on it, because you get a certain amount, $250 or $500, based on whether you're married or single, right? So your people are making decisions, and then there's these people that are putting out videos saying you should sell your house today and buy it back in 2 or 3 years when home prices drop. And we did a video that if you sold your house for $400,000 and you waited 5 years, the break-even point is you have to buy the house again for $279 to break even, because you're paying rent that whole time. You've lost out on tax breaks. You've lost out on the principal reductions that you would have been making on it. And at the current interest rate, you'd have to pay $279 to get the exact same mortgage payment you had. You basically have given, the market has to fall, I think it was 31%, for you to break even. Even if it falls 10 or 15 or 5, you're still better off riding through it. And then the question you have to ask yourself is, well, forget what home prices are going to be in 2-3 years. What do you think they'll be in 10 years?
More. I mean, short answer is they're going to be more than they are today. No matter what roller coaster the real estate goes through, we know that over time, real estate appreciates.
If you bought your house at the top of the housing market in 2006 and you just ignored the crash, you're still up 40%.
Right.
40%. You're up 40% over where you were back then, even though it tanked at some point. If you just kept it, and you're up 40%.
Right.
So anyway, like I said, we don't have a crystal ball. We can't tell exactly what's going to happen. Other things can, of course, happen. But based on everything we're seeing and all this data we're looking at, we just don't see the housing crash. We certainly see a cooling. We see markets cooling off. There could be individual markets where, they get a little, price reductions and stuff. Nationally, who knows? But, everything we've read, everything we've looked at, other economists, especially Fannie Mae, Freddie Mac, and big companies like that, they all say the same thing. That home price, the rate of increase is slowing, but not that we see a decline coming. Right.
And, look, the Fed doesn't want real estate prices to crash. That's not their intent. Their intent is for real estate prices to cool, for the economy to hopefully still chug along at some reasonable rate, and to bring inflation under control. Everything that they're doing is to bring inflation under control, and they're just sharpshooting the biggest game out there, which is housing. And that's why they're doing it this way. And I've said this before, I wish that they would find new tools, because I think this is kind of a shotgun approach, and I think there might be better approaches than just tackling interest rates. But I'm not an economist. I'll leave that to people whose job it is to figure these things out.
And you don't play one on TV?
I don't play one on TV or on YouTube.
We have been criticized for pumping the housing market because we're like jonesing for buyers or whatever.
No.
What real estate agents have you ever met that you could call and say, I'm thinking of selling my house, and they would say, are you sure you want to do that? Like you may want to not sell it. Like you may want to keep the house. Like they would say, oh yeah, sure, we'll come over, we'll do paperwork, get on the house market right away. Because right now you don't want to work with buyers at all. You want to work with sellers. Because we're going to buy right now. Over actually the last 2 years, it's been extremely frustrating.
Right.
Sellers are the way to go. That's what we do. We work with sellers, and we haven't been doing that. Like we haven't been begging people to sell their house. Other people are actually they have an agenda, right? The housing market's going to crash. You better sell your house before it crashes. Call me, and I'll list your house, and we'll sell it before it crashes. Which I think it's self-serving. I think it's a bad thing to do. Just to claim that market's going to crash, and then you better sell your house quick before it crashes. It's
disingenuous, particularly when they're not selling their house.
Yeah, that's true. I would always, if an agent said you should sell your house before it crashes, I would say, did you sell your house? Yeah, and if they say yes, you should say, well, that was a bad idea. Why would I listen with you? You don't know what you're talking about.
All right.
Okay.
So, if you thought this video was entertaining, interesting, informative, or any and all of the above, please like the video, hit the notification bell, subscribe, leave us comments, and we'll see you on the next video. Bye.
Bye.